Hello and welcome back to Money Moves Daily, your essential guide for navigating the financial markets. It's Thursday, September 4th. I'm Sophia Reyes.
And I'm Jason Miller. Sophia, the markets are definitely giving us mixed signals this morning. After a volatile start to the week, we've seen some big tech surging, but also a continued flight to safety in other areas.
Absolutely, Jason. We're going to dive deep into the growing consensus around a Federal Reserve rate cut later this month, what's driving it, and what it means for your money.
Plus, we'll break down Google's massive win in its antitrust case and why that sent big tech soaring yesterday. And in our quick hits, we'll cover everything from gold hitting new record highs to the looming threat of a government shutdown.
And finally, we'll tell you exactly what to look for in tomorrow's crucial August jobs report, which could be the final puzzle piece for the Fed. So let's get into it. All right, Jason, let's start with the Federal Reserve because all eyes are on their upcoming Federal Open Market Committee meeting set for September 16th and 17th. Market expectations are now leaning heavily toward a 25 basis point rate cut.
So a quarter-point cut. That sounds small, but what's behind this sudden certainty? I thought inflation was still a concern for the Fed.
It's a combination of factors. The July non-farm payrolls report showed a significant slowdown in job creation with a notable downward revision of previous months. And the unemployment rate ticked up to 4.2%. This cooling labor market, alongside moderating inflation, the July CPI came in at a more comfortable 2.7% annually, is giving the Fed more room to act. In fact, Fed Governor Christopher Waller even suggested earlier this week that we could see multiple rate cuts over the next several months.
Multiple cuts? That's music to the ears of a lot of homeowners and anyone with credit card debt, right? But I heard the impact on things like mortgage rates might be pretty muted initially.
You're right to be cautious, Jason. While any cut is a step in the right direction, a 25 basis point reduction is likely to have only a marginal impact on mortgage rates in the short term. Still, the broader signal of easing policy is significant, indicating the Fed believes it's gaining ground in its inflation fight.
Okay, so a small step for rates, but a big signal for the economy. Now let's pivot to something that definitely wasn't muted yesterday: Google. That antitrust ruling must have been a huge relief for them and for the broader tech sector.
It was indeed, Jason. On Wednesday, a federal judge ruled that Google will not be forced to sell its Chrome browser as part of a landmark antitrust case. This news sent shares of Alphabet, Google's parent company, soaring by nearly 6% and gave a significant lift to other megacap tech stocks, including Apple.
I remember this case dragging on for ages. For the everyday investor, antitrust ruling can sound like a lot of legal jargon. What does this mean for big tech companies and the market going forward? Is the regulatory pressure easing up a bit?
Essentially, the judge decided that while Google might still have to share certain data to address its search monopoly, the more drastic measure of breaking up Chrome was a poor fit. This removed a considerable cloud of regulatory uncertainty that has shadowed the tech sector for a while, leading to a palpable sigh of relief and a rally in these stocks. It suggests that while regulators are still watchful, they might be shying away from forced divestitures in some of these complex cases.
So, a win for Google, a win for tech investors, at least for now. All right, let's speed things up a bit with our quick hits. What else is making waves out there, Sophia?
First up, we're seeing renewed concerns about a potential government shutdown. Congress is back in session, and the September 30th deadline for a new budget is approaching without a deal in sight, creating additional macroeconomic uncertainty.
The annual shutdown drama. Just what we needed. What else?
On the flip side of uncertainty, gold futures have surged above $3,500 an ounce, hitting an all-time high. Investors are clearly seeking safe haven assets amidst ongoing global macro concerns.
Gold acting as a traditional safe harbor. Not surprising given the current climate.
And speaking of global concerns, the sell-off in global bonds is deepening. We're seeing 30-year Treasury yields pushing close to that 5% level, driven by persistent inflation worries and rising debt levels globally.
So higher borrowing costs everywhere, not great for anyone looking to finance anything big. What's our final quick hit?
For our last quick hit, let's look at corporate earnings. Dollar Tree. The discount retailer reported stronger than expected Q2 earnings in revenue, but their shares slipped significantly yesterday after they issued a rather downbeat outlook for the current quarter, citing the shifting impact of tariffs.
Tariffs still impacting the bottom line. That's a story we've heard before.
It certainly is.
All right, Sophia, as we wrap up, let's look ahead. What's the absolute most critical thing our listeners need to keep an eye on in the next 24 to 48 hours?
That would undoubtedly be tomorrow's August non-farm payrolls report. It's scheduled for release Friday morning, and after July's weaker-than-expected job numbers, this report is seen as the primary market-moving event for the week and potentially the final test for the Fed's September rate cut decision.
So, what are the experts predicting, and what are the implications for us if it's hotter or colder than expected?
Analysts are forecasting a rebound with expectations for around 120,000 new non-farm payrolls and the unemployment rate to tick down slightly to 4.1% from 4.2%. If the report comes in weaker than expected, it would further solidify the case for a 25 basis point rate cut from the Fed. A stronger report, however, could inject some uncertainty back into those rate cut probabilities.
Got it. So a big day for job numbers tomorrow, which could directly impact those rate cut hopes. Thanks, Sophia, for breaking that all down.
My pleasure, Jason. A lot to keep an eye on as we head into the weekend.
Indeed. And that's all the time we have for today's Money Moves Daily. A quick recap, the Fed is leaning towards a September rate cut, Google scored a big antitrust win, and all eyes are on tomorrow's jobs report.
Remember to stay informed and make those smart money moves.
You can always find more in-depth analysis and the latest financial news wherever you get your podcasts. Make sure to subscribe and leave us a review. We love hearing from you.
We'll be back tomorrow with more. Until then, I'm Sophia Reyes.
And I'm Jason Miller. Thanks for listening.